Good afternoon, good evening, good morning if you're listening from overseas. How's everybody doing? This is Bob Iaccino from Path Trading Partners. My partner Mike Arnold is here. Thank God, because he's the one who adapted this entire PowerPoint. I did nothing on this one, but that's okay. This is Path Trading's 10 Rules, adapted from Dr. Bob Rotella's 10 Rules of, I believe it's golf. But this is kind of a fun webinar that we do. It's interesting. It's a little bit different. We're going to be quite a bit lighthearted about this, but it's actually pretty serious subject matter, because one of the things that we struggle with a lot of the times is people trying to figure out what trading is, or trying to treat trading as if it's not what it is. And we teach strategies from A to Z. We mentor traders. We're involved in a couple of companies that provide seed capital to traders, not in the U.S., but still. And we have had a lot of experience of showing traders what trading is and trying to get them to understand what trading is. And this is kind of a fun way to get across some of the main points. So we want to do this for our Nadex audience. We want to thank Nadex, as always, for allowing us to do this to their audience. So before I begin, as always, I'd like to go into a risk statement. I'll point out again that we don't call it a disclaimer, because we're not trying to disclaim any of the information we do. We're trying to point out that trading is risky. So if you could please pay attention for 1 second, then we'll get into the meat of things. This presentation is for information purposes only and does not constitute investment advice, nor an offer, solicitation, or recommendation to acquire or dispose of any investment or to engage in any other transaction. This presentation is not intended for solicitation purposes, but only for use as general information. All descriptions, examples, and calculations contained in this publication are for illustrative purposes only. The risk of loss in trading can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition. Past performance is not indicative of future results. Normally I'd go into the risk statement a little bit, but a lot of what is said here is in the 10 rules, so we'll handle it that way. Path Trading Partners is a trading and education firm. Our mission was to form a firm that educates, evaluates, and funds traders who are committed to probabilities, discipline, and long-term trading success. And this is only achieved by following the correct path. We are not high-frequency traders, and we are not day traders. We are a firm that believes in a long-term success in trading, covering time frames dictated to us by products, markets, and price action. Mike Arnold is a 24-plus year market veteran, and of course he is the only one that did any work on this PowerPoint. He has been teaching traders online and in person for 10-plus years. It's actually coming up on 12 now, I believe. He is a strategy and development consultant to multiple hedge funds. What do we mean by that? Well, Mike is essentially a professional devil's advocate. Hedge funds develop processes and systems and trading methods, and they hire Mike to break those methods and systems and processes. They ask him to find the flaws in it. That's why he's so valuable to you guys. He's a former options market maker on multiple exchanges, and he has traded in Chicago, New York, Switzerland, and Canada, 4 of the sources of those multiple exchanges. And he is the current head of technology and trading system development for Path Trading Partners. I am Bob Iaccino. I've been around for about a half year, maybe a year less than Mike. I spent the last 24 years in commodities, futures, and forex, as well as trading equities for my own personal enrichment. And I've taught and mentored over 5,000 students at this point. I don't really like to go into my background. That's me in the top. I'm very famous. Okay, that's a joke. I'm very, very famous, though. And I was just on CNBC Futures now, so if you want to see what I look like, how would you guys want to see what I look like? All right. So Dr. Bob Rotella, and I'm going to ask Mike to turn on his microphone now, because we're going to kind of do this differently than we normally do. Normally we kind of take sections, but we're going to go into each of the rules. But first I'm going to go into who Dr. Bob Rotella is, and then we'll both kind of talk about the different rules and what they mean to trading.
Yeah,
He's written a number of, yeah, Mike.
Hey, Bob, I need you to read each slide since you didn't really contribute in any other way to this.
I did no work on this PowerPoint.
So you're going to have to read each slide, then I'll comment. I think that's the best way to do this.
Can you guys hear the facetiousness and the jealousy in my voice? Dr. Bob Rotella has written a number of golf psychology and coaching books, including Golf is Not a Game of Perfect, which actually is a really great title for a trading book. Published The Elements of Successful Trading in 1992. This presentation is adapted from 10 Rules for How to Win Your First Major by Dr. Bob Rotella and maybe Mike Arnold. Bob might have called Mike, I don't know, he didn't call me, which was in Golf Digest of June 2009. You could find some excerpts from that here at this link right here. Mike, did he call you when he wrote this?
No, unfortunately he did not. That's why I had to adapt it.
Shocking, because clearly I didn't do any work on this.
No.
All right. So rule number 1 is believe you can win. And again, we're talking about this from a basis of trading. These are the golf rules from his article about 10 rules of golf, but they apply to trading. And this is actually a very serious subject. As a trader, you need to believe that you can succeed as a trader. Focusing on loss will only foster behavior that will contribute to losing. Instead, surround yourself with books, tools, and an environment that will solidify a belief that you can succeed as a trader. Put yourself in an environment where you have access to other successful traders. Learn from them, model their successful behaviors, and cultivate the mindset that will enable you to believe that you can win.
Yeah, this is very, very important. It's first of all, I mean, you can go into all the metaphysical reasons, all the studies, but if we just go into pure brain chemistry, your brain chemistry, will literally filter. We've gone through this in other presentations, that it deletes, distorts, and generalizes. But if you're really focused on things, you're sort of telling your subconscious or unconscious what to delete. So if you're focused on losing trades or afraid of loss, okay, your brain's going to be focused on that, and it's actually going to possibly delete information or actually delete trades. You won't actually see the trades that are the winning trades, not that you know, but the high probability setups. Traders who are so focused on loss, and all of a sudden they take losing trade after losing trade after losing trade. And I've actually sat beside traders because I've worked at prop shops and had trading teams, and traders who maybe they, started having a losing streak and then they started focusing on losing. And I knew their strategies and stuff, and I'd say, well, you just missed that trade. I'd be watching over their shoulder trying to work with them, and it's, what trade? No, the one, that was your setup, wasn't it? Oh, I was thinking about that the next one was going to be a loser. Next one's going to be a loser. And they're literally deleting out trades. They're actually deleting out a bunch of trades because they're afraid of taking another loss, instead of really focusing on believing you can win, really focusing on, let me execute my trading strategies I've researched. Hopefully they're in your trading plan. Let me focus on the positive things. Let me focus on behaviors that foster that kind of environment where I can succeed. So I'm focusing my brain on finding the proper setups, executing them correctly, and then the winners will naturally take care of themselves.
My favorite part about this slide is essentially focusing on loss will only foster behavior that will contribute to losing. And that really speaks to the idea that you can somehow eliminate loss, and you can't. Loss is a part of your life if you decided to take up trading. Everyone listening to us right now, and then I'll go on to the next one, everyone listening to us right now can succeed at trading at some level. Not all of you can quit your jobs and become full-time traders. Not all of you can make enough money to buy 3 vacations a year, but all of you can succeed at trading. It just depends on the commitment, the time, the capital, and essentially the amount of yourself you want to put into trading. But loss is now a part of what you do if you've decided to trade. And if you focus on loss as opposed to focusing on your process, you will foster behavior that contributes to losing.
I mean, if a baseball player were to get up and focus on striking out, it's not going to help his success. If you're playing basketball and you're at the free throw line and you focus on missing the free throws, if that's what's going on in your head, while you're taking the free throws, it's not going to help you get more free throws. It's not going to help you sink those baskets. It's not going to help you get on base and get the base hit for baseball. It's not going to help you hit the golf ball any better.
So following along that same line, rule 2, don't be seduced by results. Don't be fooled by false claims of immediate success and unlimited profits as a trader. There are no shortcuts, and turning 100 into 1 million in a matter of a few months will not happen. There is no method, trick, or strategy that will provide 100% winning trades. Trading requires hard work and dedication. It requires following proper money management and growing your trading account over time. It requires you to focus on the step-by-step process of executing the trading setups instead of focusing on the money. Learn a trading method or a trading methodology, trade small, and with practice and dedication combined with time, you can become a successful trader. You will not find the one weird trick that shows up in your email box every day. It doesn't exist.
Or you will not find, I think I forwarded you an email the other day that said, what was it, 100% winning method in trading? It doesn't exist. Guys, I've been in this industry since 1992, and I was even working on it before 92. That's how I knew I wanted to go down to the floors. And, you know, I see traders all the time. They're chasing the next thing. They're trying to find the perfect strategy that ties in what Bob said before, eliminates all losers. First of all, you're never going to eliminate all losers. We talked about that. But there's not one secret strategy that you're just going to go out and purchase, or somebody's going to teach you, that's going to turn that $100 into $1 million, or that $1,000 into $100,000 in 3 months. I see these things all the time. It doesn't exist. All right, and especially if it did exist, you would not be able to buy it for $99, $3.99, whatever the price would be. If you had a strategy that turned $1,000 and you could prove it into, $1 million in a matter of months, hey Bob, would you walk them into Goldman Sachs?
Yeah, I know a couple of guys at Goldman Sachs and a couple of guys at JP Morgan. If you have that strategy, or if you know someone that has that strategy, I will walk you in the front door to pick up your $25 million check. You don't need to trade. Okay, Mike knows this from being a consultant to these people. Okay, if you have that strategy sitting in your back pocket, don't trade it. Just call us, reach out to us. We'll walk you into Goldman Sachs and they'll buy it from you. The key point of this is, Mike and I have talked about this a lot. We may have mentioned it in other webinars, we may not have. But Nadex is a great place for you guys to start because of the simplicity of the products. But you're still trading options. And if you're trading Nadex spreads, you're trading vertical debit call spreads, or put spreads, essentially. But this is a great place for you guys to start because a lot of it's done for you. But you win the first 10 trades in a row, don't all of a sudden dump your money into that. And I know that Nadex doesn't mind me saying that. They're not here sitting there saying, guys, don't say that. We want big accounts. That's not what these guys do. What's happening here is you're being provided a platform to take some low risk, low money trades, and you should learn from it. And if you win in the beginning, it's almost worse. It's almost worse than having losses in the beginning. Because for us as educators and mentors that we've been for 20 plus years combined, one of the worst problems we have is bringing down a trader who has early success. Sulking won't get you anything. Sulking is one of the worst things you can do when trading is getting you down, especially during a series of losing trades. If you start feeling sorry for yourself or thinking you are cursed or thinking the markets are out to get you, which, by the way, they don't know who you are, so they're not out to get you, your focus will suffer. You won't be able to find and successfully execute the next trade. Losing streaks are part of trading. All traders have them. Good traders accept the losses and move on to the next trade. They do not dwell on the past and do not focus on the negative. They simply move on to the next trade and execute their plan. A losing trade is not negative if you have a process. It's negative to your account balance, and a winning trade is positive to your account balance. But a losing trade is the complementary probability to a winning trade. Go ahead, Mikey.
Yeah, we keep tying this because especially since it's from a original sports article, it's what I talked about before. If you focus on, man, why do I keep striking out? Why can't I do this? It's just going to exasperate. It's just going to exaggerate the results. Losing streaks happen. All right, we talked about, I think it was maybe it was last week, where I talked about Monte Carlo simulation, and if you're keeping your trading log and your trading journal and how important those are, but then you run your trading stats through your Monte Carlo simulation to see, based off these kind of stats and the probability curves, theoretically, how many losers could you have in a row? All right? It's a lot more than most people think. Even if nothing's broken or nothing's wrong with you or nothing's wrong with your system, there's many times that you have more losers than you think unless you've done the research and analysis. And losing streaks are part of it. Just like winning streaks are part of it. But you don't hear people getting upset when they've had like 10 winners in a row. They just get upset when they had 10 losers in a row, then they start trying to focus, as Bob said. The market's out to get me. No, the market does not know who you are. Nothing is going to out to get you. The only thing that's out to get you is if you start doing things to yourself that get in your way of successful trading.
We had a trading student years ago who was actually pretty good. He was pretty successful. But when he would lose money in a particular market, he would focus on that market. I remember one specific instance where he was trading the dollar yen, and he lost money, and he said to me, I have to get my money back from the dollar yen, as if the dollar yen somehow knew him. And the dollar yen somehow reached into his wallet and took that money out, as if that specific market had anything to do with his loss. And the interesting thing about the loss in that particular trade was it wasn't a bad loss. It was completely within his plan. It was an acceptable loss. It was a loss that fit the style of trading he had, and it was within the scope of probabilities for his method. But he then missed the next 10 trades, focusing on trying to, quote unquote, get his money back from the dollar yen.
Yeah, we see that with people's revenge trading. Like, I'm going to get it back from that. I'm going to get it back from the S&P 500. I'm going to get it back from crude oil. Or I'm going to get it back from that market maker. They didn't know you were on the other side of it. Nobody knows who it. It was one thing when you were standing at the pit looking across from each other.
I want to get it back from that guy.
Yeah, I'm going to get it back. And you don't even do that. Let's say you were on the wrong end of the trade. You're not going to specifically go after to try to get a trade on the other side of that person. Just let it go.
Rule 4, beat them with patience. Whenever you have to choose between an aggressive trade and a conservative one, go with the more conservative one. There's a number of reasons for that. This can mean multiple things. First, don't increase risk just because you think that this trade has to be a winner. Define your risk per trade and keep it consistent. There are no guaranteed trades. Build your account over time. You do not need to score a birdie or an eagle on every hole. More often than not, when you try to hit the home run, you'll strike out. Plan the trade, which includes the amount you are risking, and then trade the plan. And over time, you'll become an excellent trader and reap the rewards. You guys, if you know anything about sports at all, you know this, okay? You know that when you swing for the fences, you strike out. Baseball analogy, right? If you play par golf, you'll be a good golfer. Okay, let's take it away from the sports analogy, okay? If you walk at a consistent pace, you can calculate what time you're going to get to where you have to go. As opposed to if you hop on a bus, jump off a cab, get caught in traffic. If you say, I'm going to walk from here to there at 2.5 miles an hour, I know what time I'll get there. You beat the market with patience. You don't beat it by getting these giant trades. It seems very satisfying to make a huge winning trade, but it actually can be completely counterproductive.
It's like the tortoise and the hare. Slow and steady wins the race at the very end. And we see too many traders, especially after a couple losers. It ties into what we just talked. Maybe they're going for a revenge trade, and then they start getting aggressive. And if you have to choose between aggressive trade and conservative one, go with the conservative one. Aggressive trades is actually bringing out the wrong behavior in most people. Slow and steady builds the account over time. It's doing the right thing, taking the right repeated action over time that really builds the account. It's not like these movies you see, the trading movies where people are, hey, look, I killed it again. And most really good traders are really, really boring.
It's funny that this whole slide really kind of contradicts why a lot of people get into trading. We call it the juice, right? People get into trading for the juice. They want the excitement of it. But they only want the positive excitement of it. They don't want the negative excitement of it. And what really happens from a perspective of successful trading is a slow, steady, patient build. It's very much like growing a plant, more so like growing a plant than it is like hitting a home run, okay? A little water every day, a little fertilizer, and slowly that plant grows, and in a few months you've got tomatoes. I'm Italian, so we grow tomatoes, right?
See, I used to go and count cards, and it's, again, same thing with that. A lot of people try to get into that thinking you're hanging out in a casino, you have pretty girls on your side, you're sipping your cocktail, and you're just raking in the money. It doesn't work that way. When you're counting cards, first of all, no drinking, and you're focused on the cards. And it's really, really, really boring, and it takes all your concentration because one mistake an hour erases your statistical advantage. So you can't make the mistakes. So it's the same thing with trading. People, they see fancy cars and all this other stuff. I want that, but good trading is conservative and building your account over time.
One last thing before I move on to the next slide. That is how a lot of people will get you. They'll get you with this idea that you can pay off your house tomorrow, or you can get yourself out of debt tomorrow, right? Well, if that actually does happen in reality, stop trading the second that happens, because risk and reward are inexorable. You cannot separate the two. So if you make money really quickly, what's the counter side of that? You can lose money really quickly, and a lot. Ignore unsolicited trading advice. This is a good one. The worst time to give someone your opinion is when no one has asked for it. Corey Stallworth. There are countless people that will give you their unsolicited thoughts on what a market's going to do. This is noise, and it's irrelevant. You are responsible for your trades and only your trades. It doesn't matter what any other trader thinks is going to happen. You will get outside opinions, but don't let this noise influence your trade. You are the owner of that trade. Constantly looking to others and second-guessing yourself will only hurt your trading. It can cause you to deviate from your trading plan. This is not to say don't learn from others, but don't jump from one thing to another. Try to fine-tune and optimize every aspect and hopefully avoid all losses. Excuse me. If you want to incorporate something new into your trading, spend time researching it and practicing it before incorporating it into your trading strategy. For this one, I like to use an analogy of cooking, okay? If you're trying to make the perfect, I don't know what, chili, okay? And you take opinions from everybody. You take opinions from a guy from Louisiana who says throw in some cayenne pepper, right? And another guy from Italy who says throw in more garlic, okay? Another guy from Alaska who says throw in some pickled herring, okay? You're going to have the worst chili ever. But if you consistently make your recipe and taste it, say, okay, maybe it can use this, I'm going to try this out, and then that doesn't work, you try this other thing out, but you stay consistent with your cooking, you can make changes. The issue with unsolicited trading advice is it can cause you to A, add more risk to something where you shouldn't, or B, make a change that isn't within your trading strategy or trading plan. You can't make adjustments unless you're consistent.
I used to see this at the prop shops all the time that I used to work with, where one trader would be long something, he's in his trade long, and another trader, you're long that market? I'm short that market. Well, and then the guy would, what did I miss? What did I miss? And he's doing his analysis. He's like, I better just get out. Well, you didn't even ask the guy. The other guy was short on like a daily time frame. He was long on a 5-minute time frame. He was looking to hold his trade 15 minutes. This other guy's looking to hold it for a week because he's doing a different analysis. You don't know. You don't know what the other person's trade is. You don't know their opinion. You don't know where they're long or short necessarily, where they're getting in or out, where their stop is, where their target is. Bob, you used to, do I remember where you used to ride to the floor with other guys for a while and what was on the radio?
So just a little real quick background. When I first started trading, I lost just under 6 figures in just under 7 months. Actually, just under 8 months. And because of that, I couldn't afford to drive down and park anymore because I lost all this money. So I used to carpool with 2 other traders. And the worst thing in the world was driving with them, listening to their opinions on the markets. They would put on WBBM in Chicago, which would have a little bit about trading, but not much, a little bit about markets. And something would come on, and the guys would be talking about how they wanted to short the euro, or how they wanted to buy the 10-year, and all this stuff. And I would hear this chatter in the car. And then sure enough, I'd get to my desk, and I'd look at my charts, and I would find the trade they were looking for, even though it wasn't there. I would find it. Because I was influenced by the 45 minutes of chatter that happened in the car ride into the office. So I started taking the trade because I couldn't take it anymore. At the end of the day, I would look and say, that trade wasn't, how did I even find that trade? That trade wasn't real. I was just influenced by the guys that I was driving in with. So then I stopped going in with those guys, and I would go in with a completely blank slate, do my analysis, and find my own trades, and my trading improved. Now, some days they were right, some days they were wrong, but the bottom line is they were pulling me away from what I wanted to do. A few weeks back, I was on CNBC Futures Now, and Mike and I talked about what we thought was going to happen in the crude oil market, and I went and said what we thought on Futures Now. And I said it was going to go to 51.68 and we would sell it there. It went to 51.67 and subsequently dropped to $46. At the same time, Scott Nations, who's one of the guys on Futures Now, and I know Scott, he's a smart guy, had a short trade that he put on, and I said that I wanted to buy it to the next level, right? His trade worked, but in the course of his trade working, so did mine, because my parameters were different. My stop was further away, my target was further away, my position size was smaller, my time frame was different. We both put on opposing trades that both worked. That's why you have to stick with your own thought process. Embrace your trading personality. This one's really important. It goes to what I just spoke about a second ago. Understand your trading style and find an approach that matches your time commitment and personality. There are good approaches for trading in short term as well as long term time frames. Find what works for you. If you can only look at the charts 1 time per hour, then learning a scalping strategy is not going to work for you. Once you know your trading time frames, also make sure that you understand how your personality deals with losses. There are some traders who make money with only 20% winners and 80% losers. But if you're not able to stomach sitting through losses 80% of the time, then that's not the trading style for you. 2 quick things, and before I turn it back over to Mike again. Mike and I trade a lot of the same methods, right? But his entries, when we take the same trade, his entries are often better than mine because he has a patient sort of a strategy where he waits for certain pullbacks that I don't wait for. Why? Because I'm out of the office quite a bit and he's not. So it fits my particular lifestyle, my trading personality. I go out for meetings and I put on a trade. Mike sees the exact same trade as me, but he waits for a pullback on a long or a rally back on a short to put the trade on. And then he'll have the same trade as me, but he'll have a higher profit level. He might have a smaller position size. He might have a bigger one. It doesn't really matter. It's the same trade, but it fits with his trading personality, his time commitment, and my particular trade fits with my trading personality and my time commitment. And you have to embrace that. This goes back to the prior slide, as well as having its own rule to go with it. You have to make this work for you. All of you have the ability to succeed, just at different levels and in different time frames.
Yeah, this is critically important that you find something, a strategy, a methodology, and especially time frames that work for your personality. A lot of people think, oh, I'm going to take very little, I'm going to learn a scalping strategy. I'm going to, 5-minute, 20-minute trades. Those are the ones that are for me. Sometimes they're not. Sometimes it doesn't sync up with who you are, and it doesn't match your attention span. It doesn't match your risk tolerance. It doesn't match for a variety of reasons. And if you're trying to do something that doesn't match your personality, it's not going to really work out very well. One of the things that we try to work with traders on is finding a strategy and a time frame and a methodology that works for them, what their goals are, what their personality is. A lot of people, it works better that, that they put on a trade and then they don't watch it constantly. It doesn't have to necessarily be a long trade. It could be like a 2-hour a 2-hour spread. But sometimes when they sit and watch that 5-minute chart, watch it constantly, it messes with their trading. It's not for them. They're actually better to find that strategy where they put on the trade, and they know where they're getting in, they know where they're getting out, and then they don't have to constantly watch it. So this is you have to do something that's in sync with you, that is in sync with your personality and who you are. So, like at the bottom, there are some traders who make money with only 20% winners, because when they have winners, it's all about trade expectancy. Their winners are very large winners, and their losses are small losses. But a lot of people don't like to see, let's say you're taking 10 trades, they don't like to see only 2 winners out of 10 trades. They actually, from a psychological level, get too focused. It ties into one of the other rules we had earlier. They get too focused on the losses and then start maybe sulking or feeling down, or, oh, look, there's another loss, there's another loss. And even though if they could trade it effectively, they would make money, they can't trade it effectively because they're focused on the losers. So you have to find something. I know a trader who he's a really good trader, but he averages, because we've talked, he averages about 25% winners. But he also trades on a weekly time frame. And he might be in a trade for 9 months to a year. And when he catches a trend, when he catches something big, he's in it for a long time. When he gets in something and it doesn't work, he's out. Okay, that one didn't work. Small loss, small loss, small loss. Ah, there goes one. I'm just going to sit on my hands and I'm going to trail my stop. Small loss, small loss, small loss. I caught one. That's his style. But for a lot of people, again, it wouldn't work.
Rule 7, have a routine to lean on. Traders need to have a routine to lean on and follow every day, throughout every trade. A successful trader's routine is found in his or her trading plan. We did a couple of trading plan webinars. If you guys haven't seen those, I'll show you where they're sitting for you guys to watch when we're done with this. Your routine should not only outline all your entry and exit strategies, but also your risk management, the time frames you are trading, the markets you are trading, and the times during the day when you are dedicated to trading. Repeatedly performing the same routine over and over again builds discipline as a trader and reinforces that you should only be taking trades within your plan. In addition, each strategy that you trade should be outlined in a step-by-step checklist so you can verify that the potential trade setup actually meets all of the strategy criterion and is a valid trade. Okay. Here's the line I like to say about trading plans, and we talked about it in the trading plan webinars, but about having the routine. Do you actually want to be a trader, or do you just want to say you're a trader at a cocktail party? That's the difference between the people who are actually going to be willing to put in the work and the people who are going to leave this webinar and listen to our other trading plan webinars and say, you know what, those guys have only been doing it for a combined 51 years. They don't know what they're talking about. We're just going to go ahead and buy a strategy that just, gives us green arrow, red arrow, and we're fine. All right? That's the difference, is if you actually want to be a trader, you're going to have a routine. And I mean, make that as detailed as you can. You wake up at the same time. You go to the gym at the same time. You make breakfast at the same time. You do your analysis at the same time. And you do the same things, because the only way to adjust the routine is to have it be a routine. And the only way that you can know you're doing the right things is to have that routine to lean on.
And that routine actually anchors patterns in your brain. It's why you see athletes, they have their routine where the batter's going up to the plate. The pitchers, when they're going to throw the next pitch, they have a certain routine. Golfers, very specific routine when they go up. They might have 1 or 2 practice swings. They do the same thing over and over again because it gets them in the zone, it gets them focused, it gets them, prepared mentally. Well, trading's the same way. And having a routine in trading, like Bob said, doing your analysis at the same time, sticking with your routine, not just going off this way and that way, and I'm going to just try this today. I'm going to try this. Oh, look, I don't have a strategy for this one. I'm just going to try it and see what happens. That's not a routine. That's just throwing stuff out there to hope something works. It's really important to build a solid mental foundation, and over time that will help you stay focused. It actually ties into these earlier lessons. It helps you focus on your success. It helps you eliminate focusing on the losers because your brain gets into the zone. It gets into that, my goal is to execute the plan. And this actually ties into the next rule.
Find peace while trading. Difficult, right? Quote from Mike Arnold at the top. Recognize your emotions, control your actions. Trading is not the time to be emotional. Your goal while trading should be to execute your trading plan and execute your trades. You need to find peace of mind by following your plan, planning your trade, and executing it during the time dedicated to trading. Emotions in tradings, both on the winning side and especially on the losing side, can sway you from your plan and put you on an emotional roller coaster. If you want to be on a roller coaster, go to an amusement park. It's clever, Mike. Trading is not the place to let your emotions run wild. This slide is the hardest one to achieve. It's really easy to say, but the key to it is in prior slides. If you understand that losing money is the same as making money in trading, they're actually the same. If you have a good strategy, a good time-tested sound strategy, and a process, and a pattern that you follow every single day, losing is part of what happens during your week and during your month and during your year. And if you execute your plan correctly with the right strategy, you win more than you lose, and you're fine. Everything's fine. It's very common, and I remember this from the trading floor as well, for traders to have a big day, and then they go out and spend it, and then they have a losing day, and then they kind of cram back in, and they close back into their shell, and then they have a big day and they spend it again, as opposed to the correct type of trader who just has a process. And it's like, okay, I had a really big day, but that provides me with a cushion for the inevitable losing day. The last or the worst time for you to make changes in a trade or be emotional is during a trade.
Yeah, the emotion, and the key is to recognize your emotions, not try to control your emotions. The emotions, if you learn to just sort of witness them, all right, and it's harder in the beginning, but when you find yourself either getting emotional for, I just nailed that trade, yes, just watch that, just observe it. Or, man, there's another loser, just watch the emotion, just watch it, and then you go back to your trading plan. I got to look back for my setup. Let me focus on my valid setup. And over time, you're going to realize the emotions aren't going to give you as much juice anymore, and they're going to slowly dissipate as you just focus on doing the right thing. And trading then becomes a business. It's not about, oh yeah, I nailed that one. Oh, that was horrible. The market got me on that one. It's not about that. It's literally a business. And that's how you grow your account slow and steady over time, treating it as a business. And, you can't try to control. The people who try to control the emotions, it actually sort of gives you unconsciously something, your brain and your body, and something to push against. Oh, look what that winner was really emotional. That loser was really emotional. So it actually, you say, I can't have those emotions. I can't have those emotions. They come out more and more extreme, rather than just observing them and say, okay, let me refocus on my plan. Let me focus on my routine. That's why we talked about the routine too, because then you get back to your routine. The routine gets you back in that zone, in the zone of, here I am. I'm not judging which trades are going to be winners and losers. My job is to execute them and do it to the best of my ability and grow the account over time in a slow and steady manner. Did you want me to read your quote, Bob? So, Rule 9, test your strategy and yourself. Your goal is not to make money. Your goal is to take every valid trade that shows itself. The money will follow. You see how there's a lot of little repetition in this because all these things come together synergistically. So I believe that a trader needs to test themselves in many different ways. When learning a new strategy, it is important to build confidence by back-testing the strategy and then trading it in demo. After the trader becomes comfortable with the strategy, then the real test comes, taking every valid trade that shows itself. Too many times, a trader tries to pick and choose the best setups, only to later realize that they were just afraid of taking the valid trade because of what they thought was going to happen versus executing their trading plan. Test yourself by taking all the valid trades, no matter how you feel about the trade in the moment. You will find your trading will improve because of it.
I just didn't want to quote myself. It just seemed weird. Here's the thing about this slide is I think about an emergency room when I think of this, right? Or a trauma surgeon or something like that, where they have a process that they follow. They have things that they need to do to try and save patients, and they don't save everyone, right? They might think a particular situation doesn't look quite right or doesn't feel quite right, but they follow the protocols, they follow the process, because over long periods of time, they've been proven to be the best way to handle these particular situations. Traders do this all the time. All right, whether it be through noise, which we covered on another slide, or deviating from their plan, which we covered on a different slide, they'll say, you know what, I know I have a trade here, but the Brexit's coming up, and I just don't feel like this is the right trade, or the Fed's going to speak, or we've got news later. One of our students at Path Trading Partner actually asked Mike and I recently in one of our webinars, one of our Path Trading webinars, if we take trades around numbers, and our answer is yeah, we do. Because when we did the testing of the particular strategy, we did not remove the data that was affected by numbers, number one. And by numbers, I mean economic news, right? And number two, sometimes there's economic news or political news or geopolitical news that you don't know about and isn't planned. And sometimes that stuff moves you to profit and sometimes it doesn't. So your job is to take every valid trade that shows itself within a time-tested strategy, right? And if you do that, the money is the result of that. The goal is not the money. The process is the goal. The process is what you're supposed to be working on.
Yeah, and a lot of times people try to pick it might be the same setup, but I think this one's going to work, or I don't think this one's going to work. It's really they're either afraid of a loss or chasing a win. You don't know. I mean, if it's truly a tested strategy, you didn't filter out which ones during the testing, which ones you thought were going to work versus you didn't think were going to work. You tested the strategy out. But traders, they try to pick these, and they're generally trying to do it to avoid losers, and that they know, Joe, this is the cleanest looking setup I've seen all week. Doesn't have to be the winner. Doesn't have to be. You don't know. If I knew ahead of time every trade that would win versus lose, you wouldn't be hearing from me right now, because I'd own an island. Literally, do we know? Do you know which of our setups are going to work before we do them, Bob?
That's the thing. We have, well, I don't want to talk about us because then I already said in the risk statement that this is not a solicitation. So I'm going to leave it.
No, but I mean, if whatever.
You can have a strategy. It doesn't matter whose it is. You can have a strategy that wins 80% of the time. And you don't know when that 20% is going to be. And you don't know what number that 20% is going to represent. In other words, is that 2 out of 10 trades are going to lose? Is that 200 out of 100 trades is going to lose? Is that 2,000 out of 10,000 is going to lose? So theoretically, if you have an 80% winning system, well, what time frame does that cover? That means you could have 2,000 losers in a row, theoretically. Theoretically. That's what the Monte Carlo simulations are about, which again, you can learn more about in our last webinar that we did for Nadex. So you have to be realistic about this stuff. No, you don't know when the next loser's coming. You don't. So, no, I don't, Mike. Thank you for that setup, because that's a very valid question.
No, and I've rarely seen, I don't know if I've ever seen, because I've done a lot of work with traders, and I work with their strategies, because, again, I've run prop groups, and I see them skipping trades. I'm like, there's your setup. What'd you do? Oh, I thought that one was going to be a loser. Well, when I go back and actually go through like a week's worth of trading and execute all their trades as they should have been executed, and compare it to their results, just taking the trades, if they hadn't tried to filter it, they would have had better results because they didn't know. You don't know. Now, if there's something you're starting to spot that you're like, oh, wait, I'm starting to see something, then you go and you say, what if I were to incorporate this into my strategy? and then you go test that out. You can get ideas of, oh, what, I'm spotting something else, and I've seen this before. But too many times people go, I saw this the last 2 times, and both times it was a loser. That's not, and then they modify their whole strategy. Well, it's not the way to modify your strategy, because that just made it happen 2 times. Maybe the next 5 times that happens, they're all winners. So you don't know. If you see something, then you go back to your trading plan. You go and you test it out. You validate it with a lot of results, and then if it works, if it makes your strategy better, then you incorporate it into your trading plan, and now you have something. But it's not based off the last couple trades. Oh, I saw this happen. Every time this happens, we were talking to another trader like that. Every time this happens, it goes down. And then you're like, well, how many times? 3. And there's like, that's every time? Because so they modify their behavior, they modify their trading results just based off something that happened, and that they think that this is, oh, I'm fixing my strategy, and it actually makes it worse.
That's the funniest one. You know, it happened, I've been watching it for a while, and it happens all the time. Well, how long have you been watching it? A month. It happened the last 3 times. Well, for all you know, there's been, a 3-week reverse repo operation going on by the Fed, which affected that for this particular period of time and nothing else. So test your strategy, test yourself, and you'll find your trading will improve. Rule 10, find someone who believes in you. By the way, I believe in you, and that's actually I'm not stroking you guys because I don't know any of you. But I believe that every single person listening to us has the ability to succeed. I said it earlier, and I mean it. You have the ability to succeed on some level, okay? On some level. You have to accept what level that is based on your time commitment, money, etc. But you have the ability to succeed. There's a saying that it is easier to see an issue someone else is having than to spot one that you are having. Find a trading mentor, someone who can help you see the challenges and blind spots you have, and who can also help coach you through them. Find someone who will tell you the truth. That's a really hard thing in trading. Find someone who will tell you the truth about your trading and not sugarcoat the tough lessons. Someone who will be there for you on a regular basis to encourage you and remind you of the realities of being a full-time trader or a part-time trader. Okay, the realities are the same. Okay, the facts are the same. The process being important is the same. Okay? It's all the same. You have to understand that what you guys have done just by being in this webinar, okay, just by paying attention to the whole Nadex process, you've come to an exchange that has a simpler solution for you, a lower cost solution for you. That's true. But it's still work. And we're not here to discourage anyone. We're here to encourage you to take the steps because we actually believe in what's going on at Nadex, and we believe in you guys. So find someone else you can talk to on a regular basis. It doesn't have to be us. But there are realities of trading. And if you've completely decided to ignore those realities, that's okay with us. But it's not going to work.
We're not even sugarcoating stuff with this. I mean, we're the guys coming out and saying you're not going to turn $100 into $1 million in the next 3 weeks. So these are the kind of things you have to learn, and it helps to try to find someone who not only believes in you, who will say, look, I'm looking at your trading results, and I'm seeing you filtering out these trades. I'm seeing what you're doing, and you got to get back to your plan. You got to do this. You got to do this, but also encourages you and say, look, you did this really well. You're all right. You're starting to not put your you're starting not to trade emotionally. You're starting not to do the revenge trade, or you're following your plan. Hey, great job. Great job today. There were 4 setups. You took each of the 4 setups. Those are the things you need. And when you deviate from your plan, or today you didn't have such a great day. You were, your first one was a loser, and then you tried to revenge trade, and then you went off plan and just took a setup that wasn't even one of your setups because you thought you had to win your money back. And you really have to look at that behavior. But to go back to your trading journal, look at what was going on with you. Look what the trigger of that was. Look where you went off the rails, and let's figure out a way to work on that because I know you can be successful at this.
Whoop, went back one. So that's it, guys. We just wanted to go over this and go to a little bit more lighthearted version of a webinar. We're generally going through all these different, Greeks and all this other stuff, but this essentially fits in with the trading plan and the work that you guys need to do to be real traders and to actually take this stuff seriously. I promised to show you guys where the other webinars are. This is simply nadex.com, Learning Center, Webinar Archives, and then look for Path Trading Partners, and you'll see Build Your Trading Plan 1, Build Your Trading Plan 2, then you scroll down and go to, you're going to want to get past these. I mean, I want you to watch these too, don't get me wrong, but you go to the next page and you will see Understanding the Trader's Mind. Here it is. Becoming a better Nadex binary and spread trader by understanding the trader's mind. That's the series. So, as always, if you could, follow us, like us, go to our website and look at all the free stuff that we've got there for you guys, and just go ahead and, if you could, for my sake, because I'm very attached to our podcast, download the Money Path podcast. There's some fun stuff going on in there. Does this person need to be someone I need to be in the same room with? I live in the woods and the mountains, and I'm wondering if there's a free forum or other community source for like-minded folks. No, Eric, it doesn't have to be in the same room with you. Again, the last thing I want you to do is have a community that influences the way that you trade. But there's communities out there. I mean, I would defer to Mike more on this than me, but I've been involved. I mean, both of us traded on trading floors, and there were some people that I gravitated to and some that I stayed away from. So you're going to kind of have to play around and find the ones that you like. There are some forums out there, though. Any other questions? We're always happy. Go ahead, Mike.
Yeah, I was just going to say, no, you don't have to be in the same room, but because I've actually been worked remotely with people, and they will send me. I'll know what they're doing because I'll understand their trading plan, their trading blog and trading journal, and then I'll actually review what they did each day, and they'll review what I did each day. I used to do that years ago. So just find somebody who's on the same mindset with you, and it doesn't matter if they're the same location. If you actually both want to become better at trading and you're both committed to the process, you can figure out how to help each other and hold each other accountable.
Do any forums come to mind right now for you? No, they don't for me, to be honest. Again, I have sort of my own little group that I've developed over 20 some odd years. Mike, do any come to mind for you? They don't for me.
Not real. I'd have to think about it.
Yeah, I mean, it doesn't need to be in person is the bottom line, Eric, but you got to, be real careful about the forums you get into too. I mean, I'm sure there's some good ones out there. You got to be careful about that. I'm playing the lottery when it comes to demo trading. I'm looking at charts and not able to comprehend what is happening. Again, Lori, if you go back to some of our other webinars, we focus over and over again that you need a trading strategy. Okay, you can't just guess. You simply can't guess. You need an actual strategy. And, obviously this is a path trading webinar, so I'm partial to what we do, and this goes to Gabriel's question too. Yeah, we have actual courses that this is not supposed to be a solicitation. I don't want to get into this too much. We have courses that we sell. But if you go on our website and sign up for all the free stuff, you'll get an idea of our style. Okay, so just sign up for the free stuff. I don't want to make this a pitch ever, because Nadex is kind enough to give us this time, and I don't ever want it to be like that. But we sell actual strategies, and that you can actually look at the charts and understand what's going on, and understand that probabilities are in your favor or they're not. And understand that probabilities being in your favor does not mean 100% guaranteed winning trade. All right, but you cannot guess, Lori and Gabriel, you can't. You can't simply go into a trade and say, I think this is happening because I got a feeling. Gut doesn't exist in trading. Your gut develops from time in the chair. and doing the thing over and over again and seeing things over and over again. We like to think that we accelerate that process, but again, I don't ever want to turn these into pitches for what we do. You can go to Path Trading Partners, listen to the Money Path podcast. You'll see how we do things. You'll hear a lot of it on there as well. Hopefully I answered your question without like acting like I'm trying to sell you something. What else, guys? You're welcome, Lori. Thanks for the question. You don't have to keep typing in that we're great. I'm not going to read it. I appreciate all the comments that were great, but I'm not going to read them. I love doing that. Nobody actually typed that in. Just kind of funny.
Oh, brother. I have no comment about you. That actually was a comment that I didn't have a comment.
Now Eric is making fun of me. I like when everybody makes fun of me. It's fun. All right, stop writing that we're great. Again, I'm not going to read how great we are. I'm just not going to do it. All right, Nadex is going to close the webinar on me if I keep talking about how great we are. So, thanks for being here, Mike, as always. Thanks for taking the time.
Thank you, everybody.
All right, guys. Cheers, everyone. Again, pathtradingpartners.com. And please download the Money Path. You're going to like that a lot. And follow us on Twitter, like us on Facebook, and catch us next week at the same time on the same day. Cheers, everybody. Thank you to Nadex. Thanks, Mike.
Thanks, everyone. Bye for now.